Hello there, my name is Martin Henley. This is the Effective Marketing YouTube channel. If you've spent a second here, you will know that I'm on a mission to give you everything you need to be successful in your business. Now, as far as I know, what you need if you want to be successful in your business is really good sales and marketing. So not only am I here giving you everything I know about sales and marketing, I'm pulling in anyone I can find who will share their experience of sales and marketing with us, all with a view to helping you to be more successful in your business. Now, you can support us in this endeavor simply by watching this video through, simply by taking on board what's being discussed, maybe implementing some of that stuff in your business, enjoying the success from that, and commenting about it below. You could also like and share the video. That would be phenomenal. That would help us enormously. So, today's guest has marketing experience going all the way back to 2012. She has held marketing management roles and has been a marketing freelancer. But actually, we're not here talking about marketing today. Today's guest has also worked as an entrepreneur enabler, an entrepreneur acceleration manager, an entrepreneur development manager, and an entrepreneurship director. We're not really here talking about entrepreneurship either, but that will help us enormously with those keywords. She is currently non-executive director for Sussex Chamber of Commerce, chapter director at Startup Grind, and managing director of Brighton's #1 business angel investor group, Southeast Angels. Today's guest is from Lithuania and speaks Lithuanian. She is an ex-fitness coach. Today's guest is Kristina Pereckaite. And I meant to check that that's how you pronounce Pereckaite before we started, but I didn't.
Yes, spot on.
Oh, that's really good. Excellent. Good. Cool. So I've just told you, I think there's a really strong relationship between marketing and gym membership or fitness. I really feel like it's exactly the same thing.
Yeah, it's interesting. Like, what were you saying about it? That kind of people are bought in at the beginning?
Yeah, so everyone's completely 100% bought in at the beginning. Everyone's really motivated and interested and keen and ready to do whatever is required. And then 3 weeks later, they'd rather stay at home and eat cake.
It's interesting. I reckon that whole process of selling a gym membership, though, kind of the sales and marketing does kind of taper off, doesn't it? You kind of do a big push there, and then once people in, then it kind of just, there's not really anything else to keep there, and then it's just about products. So it's like, okay, well then the marketing is ended.
Yes,
maybe that's
but
why.
what gyms do much better, I think, than marketing companies is they get you to pay for like a whole year up front. So then they don't care if you do it anymore. Do you know what I mean? It's like, and marketing isn't good like that. It really isn't good like that. That's the answer. But the thing I think is that it's like business development, personal development. Small businesses aren't very far away from the ego of the business owner, I think. So in that sense, like personal, physical development and business development aren't very different. Everyone knows it's things they should be doing. Everyone kind of actually really knows what they should be doing, but they don't really want to do it. That's my experience. What do you think?
Yeah, it's interesting. I think also with both, a lot of people want to do everything, and they want to, like, if you think about physical fitness, they're like, oh, I want to be in my best shape, or I want to do this. And then if you think about business, it's like, oh, we want to do all of these things and be the most successful business. And with both, it's like figuring out what's the one thing that you can do, and then doing that really well until you've nailed it, and then moving on to the next thing. Just do like one small thing every day. It's like similar with, a lot of analogies for business do come from sport, don't they? And performance coaching around, if you just do something consistently really well every day and something small, it will add up to something really great. And I think you can apply that to both.
Yeah, I think you can. And the other thing, just in case we couldn't possibly push this analogy any further, is that the pitch is the same. Because everyone talks about the secret of marketing and everyone talks about the secret of health, like eat this one food to shift your belly fat, or do this one marketing tactic and you'll be hugely successful. And I think that is nonsense. Like, I don't know too much about being very, very healthy, but I'm pretty sure there's not one thing you do and then like a light switch, you are healthy. And I know for a fact that's not the way it is in marketing. So there is this kind of false narrative where it's really easy. And it's not even that it's difficult. It's just that you just have to do the work, I suppose.
That's exactly it, I think. Yeah, it's that, just because you have the solution for something doesn't mean it's going to magically work. you have to put in the effort and the hard work every day. And like, when you start off marketing for, I don't know, you start to market for a new product you've launched, you have to put in consistent work every day. Even if you find a really great solution that brings in loads of people to your shop window, essentially you still need to do that a lot at the beginning, and it's hard graft.
It is just, I don't even know if it's particularly hard. It is just that it's been framed like it's supposed to be really easy. Do you know what I mean? Like it's supposed to be. And then when people realize it's just a consistent, constant effort, like some effort consistently, then I don't know. And I really quite enjoy it. And it's not, the thing about the gym is you go to the gym 6 times, and on the 7th time, you don't need to be, you're motivated already. Do you know what I mean? You're getting the benefit. Whereas I suppose, I don't know, the 7th day where you've invited 10 people to connect on LinkedIn, maybe you're not getting quite that adrenaline pull, endorphin pull to keep you going. I don't know. But I do think that is the perfect analogy, because I built like 1,000 different businesses when I was running the effective marketing company, like an agency. And that was what I found. That's what I found. I wanted to be the small businesses marketing champion for a period of time, and then I realized that they don't deserve one, unfortunately, sadly, and then I stopped being an agency, so that's good. Anyway, so we're not really here to talk about that. We're here to talk about your thing now, currently, is that you are running the #1 business angel investor group in Brighton. That was a good piece of marketing, because I read also that there wasn't one before you started. So is there another one in Brighton now that you're competing with?
Well, no, there's definitely like smaller networks and things like that. But in terms of activity, we are the most active in what we do.
Okay, super cool.
So,
So, as you know, there are only 5 questions. So the first question is, how are you, and your specialist subject is angel investing or angel investments? Mm-hmm. Yeah. Okay. So question number 1 is, how are you qualified to talk to us about angel investment? Who do you work with? How do you add value to their lives? What is your recommendation for people who are either looking to attract angel investment or do better with their angel investments? What should people read? And who can you throw under the bus who might endure at least, and maybe even enjoy, to have a conversation like this with me? So question number 1, how are you qualified to talk to us about angel investments?
Cool. Yeah. So my kind of journey into the venture capital world is not your typical one. So if you look at all of the angel groups that exist in the UK, for example, the majority of them have been started by investors themselves who put together a community around them to invest together with. They would have had a lot of investor friends and people in their network already. Whereas for me, I was not an investor and I did not have any investor friends to start it with. But my kind of journey into it was actually when I used to run the Brighton's accelerator. It was the NatWest one. I spent a lot of time helping companies get investment ready. And once they were ready, they'd say, okay, right, I'm ready. Where do I go? And we would send them off a lot of time to London, because there wasn't really anything in Brighton where we were for like a fund or a VC or an angel group. There wasn't really anywhere to go to actually speak to investors. And going to London as a Brighton company is like, okay, great, it's on our doorstep, but it's also like the most competitive place to raise funding. You've got all these other bigger companies, raising millions every day. And so quite soon after I left, I realized actually, why don't we have a community in Brighton? And when I spoke to investors that were based here, they, and I said, where do you go to invest? And they said, well, we go to London. So it's kind of like you've got all of the ingredients here, but it wasn't being put together. And so I decided to set up Southeast Angels and just see if we could, give it a crack and just see if we could solve that problem for both sides of the table. For the founders locally that are raising funding, that they have a go-to place locally, and also for the investors that they could have a nice community here to invest alongside with. So my background is, as you said, it's in marketing, it's in helping companies, and there's quite a bit of investment stuff there. But actually coming into starting Southeast Angels, I was very much a rookie in the industry and have kind of learned on the job, as probably many business owners do a lot of the time. Yeah.
Okay, cool. All right, so that's interesting. So there's a few things I'm interested in. I'm interested in the NatWest thing. So you were with them for a number of years, and this is where you had these entrepreneur acceleration. Do entrepreneurs not go fast enough? Is that the issue for NatWest? They need them to go faster.
I mean, yeah, basically, yeah. The accelerators are, such a big thing at the moment in the startup ecosystem, aren't they? It's just a case of you've got all of these companies that are, a lot of them are, deemed to fail just statistically. And a lot of the time it's because the timing wasn't right, or because they couldn't grow fast enough. They couldn't raise money fast enough. They couldn't validate fast enough. And so accelerators are there to basically give people the resources that they need, whether it's mentors or funders or just like office space, for example, which is what NatWest do as well. Then they have all of that support of a bigger company, but they're still working as fast as a startup, and that it's supposed to help them to get there faster, or to fail faster sometimes too.
Okay. Yeah, I think that's equally valid. Like just getting out of the road, really testing it and getting out of the road. Okay, so the other thing I'm interested in is your business is Southeast Angels, but you've described it already as venture capital in this conversation. So what is the difference between like an angel investment and a venture capitalist?
Yeah, it's interesting. Like those terms are used interchangeably, and actually, just the term like venture capitalist is basically anybody who's investing in ventures, right? So that could be an angel
Okay.
investor, it could be a VC, and then and this is where it gets confusing, because the term in England VC stands for venture capitalist, but it's actually referring to like the fund companies. So where you've got like a fund that invests in ventures. And we tend to call them VCs in the UK. And then you've got your angel investors, and then you've got your VCs. So the VCs are like the big companies investing in startups. But the term venture capitalist is just an investor, basically.
Okay. For me, if I think venture capitalist, I don't think this is quite right, but I think of the gecko guy out of Wall Street. Was he a venture capitalist, or he was something else? But whereas when you think of angel investors, you're kind of thinking angel. You're thinking kind of much nicer person. Do you think?
You're able to individual people that are investing directly in the companies. Did we freeze for a second there? Is it okay?
Oh no, you're breaking up. Sorry. I didn't get any of that.
Okay. Am I back? Let me try and let me know when I'm back.
Okay, I'm hearing you better now. You are a bit blurry still. But I am hearing you now.
Yeah, I don't know what's happened. Okay. Should we wait till it looks like it might be coming back?
It's coming back now.
That's
Certainly
really
the sound's
weird,
coming
because
back.
I have really good internet.
Okay.
Okay.
All right. Shall we try again? So venture capitalists sound like nasty people, and angel investors sound like wonderful people. So did the angel investors just employ better PR people is the question.
No, do you know what it is? With angel investors, they are basically individual people. So a lot of the time they're exited entrepreneurs, and they want to support companies, right? That's where that term, angel investor is suited. The VCs maybe have a bad rep, because it's not this one person that's backing a company. It's a corporation, essentially, right? It's a company that has created a fund, and then you've got these people at the top who are deciding where that money goes. So it's not like a personal decision like, oh, I'm going to back this company. It's more like, okay, we're going to play the numbers game and invest in the ones that are going to make a return, and not maybe looking at all of the other personal stuff that an angel investor would be. So you can see why it has a different vibe. And for a founder working with those two different kinds of investors, they'll have a totally different experience, right? And that's why people try and raise as much from angels first before they go to VCs. Because going in with a VC, will change very much like the course of your business, because they're looking at, okay, how quickly can you grow and exit? And it has to work with the rest of their portfolio. It has to hit certain numbers and stuff like that. And of course, angel investors want a similar thing, but it's less of a like sort of prescripted type scenario, I guess.
Okay. All right, cool. Now that makes perfect sense. But I still can't get over the fact like every small business is praying for an angel. Do you know what I mean? It's like, so this idea that there might be an angel investor, there might be an angel coming with actual money, I think is really, really good marketing. I think people are ready to receive those people in their businesses. So it's interesting then. I'll tell you what I didn't realize for a long time, because I came to marketing from sales. So my little shtick was I'd spent my career on the sales team with all of the budget and none of the target. And I'd been watching the marketing people lord it up with all of the budget and none of the target. So when I started my business, I definitely wanted to be a marketing company. But I didn't really know anything about marketing at that point. What I knew about was canvassing, because I'd always been the sort of salesperson who had canvassed for their own leads. So the investment I'd made in marketing up until that point was in time and energy, and I was salaried, so I had the time and the energy to do that. And that's kind of the way that I started advising businesses, and then digital marketing came along, and we rode that way for a long time. The point is, what I know now is that actually marketing, or even just running a business, is an investment of time and money and energy. And if you haven't got any money, you better have a ton of energy and time, because it makes it really, really much harder work. So what's the point of that? The point is, I didn't know you needed money to start a business. And that's why I ran myself ragged for 9 years and then stopped, because it's just like, it was almost unsustainable. So what do you say to people then, like me, idiots like me, who just think, okay, I'll start a business without money?
I don't know if I fully agree with the fact that you need money to start a business, to be honest. I think quite a few people get maybe once they have the idea that they can raise money, that they fixate on that a bit too much, actually, because realistically, you want to, the number one goal of business, right, is essentially to, some people with more traditional model can get there faster if they, oh, I think I've frozen again, haven't I?
You have frozen again, yeah. Do you have a VPN on at all?
No, I literally don't know why that's happening.
Okay.
My internet is normally really good. One minute, let me just see. I don't know if it's my partner in the room downloading something. I've got really good internet, so it's really, really strange.
Okay, the only time I have mine wired, so I have an Ethernet cable into mine, because the only time this happens to me is when I have, if I'm on the Wi-Fi, then I think other things might interfere with it. Are you close to the Wi-Fi router?
Yeah, it's right next to me.
Okay.
It seems to be fine.
Okay.
Do you? Yeah, it's weird, because I feel like, I mean, I normally do things on Zoom and it's fine. I presume you have to record it in this, right?
Yeah,
because it puts us
this
side by
is
side.
better than Zoom. I find that Zoom is less reliable than this. Okay, so you're back again now. Annoyingly, it's like when I think that's the best question I've ever asked someone the last time it went wobbly, and this might be the best answer. So you were saying, that businesses, when they realize they could raise money, become fixated with that, but they don't. And then you said something, the last words I caught were the number one business something.
Yeah. So if you look at, what you're trying to achieve when you start a business is to create a sustainable business model that works, right? So you can be sustainable without having to raise money. And the reason some companies do need to raise money is because maybe they're doing something really new and innovative that they cannot create a sustainable model with for a while, until they've done loads of validating, they've created enough traction for what they're doing, or they've developed a product. So I think the number one focus should always be, how can I make this business sustainable just through how it functions? Like, how that the model needs to work and it shouldn't require funding. Of course, if you're trying to, you're trying to do something completely new, it's like, okay, well, actually, to get this off the ground, I need some cash injection in this, or I could do this in 5 years and do well, or I could do this with some money. I could do it in 2 years and do it really well. So, those are the reasons to raise money. But I do think sometimes people raise money a little bit too early, or they try to, they worry a bit too much about that and less about making it sustainable.
Yeah, I don't know if people are. I think there's a really difficult thing that goes on, which is kind of close to what we've been talking about and close to what goes on with this accelerator thing and entrepreneur development, which is, it feels to me like when you start a business, you're 100% right. The focus should be on producing something that's sustainable, like in every sense. Like it sustains you financially, it gives you what you need, and you can sustain it with the amount of time and energy that's appropriate. Do you know what I mean? Whereas it feels to me like actually starting a business is a little bit like stepping into a hamster's wheel, where you start off really slowly, but as soon as you start running, you better not stop, because the wheel's going to overtake you. Do you know what I mean? So there's this, what is it? The mythology is, there's phrases in there. If you're not green, if you're green, you're growing. If you're red, you're dead, or something. Is that what they say? I don't know. Something like that. Yeah. But it feels to me like there's this. Yeah. So like it's like, I don't know. It's like the law. Like you have to grow your business. Like being successful in your business is not having a sustainable business. Is not having enough money to sustain yourself and your lifestyle, and putting in the right amount of energy to sustain yourself. Like literally, in the 9 years that I was running my business like a business, I didn't stop thinking about it for a second. I didn't enjoy a movie. I didn't enjoy a walk in the park. I was literally in my head was in my business that entire time. And I think it's because there's this, what is it? I don't want to say narrative because it sounds like a conspiracy theory, but that's kind of like, it's like the myth. Like you start your business, get ready to be running at 1,000 miles an hour because that's what you need to do. And if you're not running at 1,000 miles an hour, then you're not really interested in your business. Does that make sense?
Yeah, maybe. I guess it depends what kind of business you're running and what you're trying to do, right? Like
Yeah.
if you're trying to do something huge and it's kind of like, race against the market sort of thing, then that's why people do get quite obsessive and put their 110% in their businesses. And it's kind of like, as much as we talk about work-life balance, like that's why people do it. But sometimes I'm sure people start businesses that are a bit more integrated with their lifestyle, and it's not about working all the time and not being able to switch off, because there are some great traditional businesses that you can run without having to stress out. It's a choice, right? It's a personal choice, I think.
It is. I think it is a personal choice, but I suppose you're right. Like somebody might decide to become a freelance fitness coach or a freelance photographer or something like that, and it might just be a lifestyle business. But lots of people go from being salaried into a job, and they need to. Do you know what I mean? It's like this is their income. I don't know. I don't know if it's particularly useful. There is something about it, I think, and I think the injustice of it is that every small business owner that I've ever engaged with is absolutely doing everything they possibly can to make their business work. But statistically, so many businesses fail. That, for me, is the injustice of it. So people put their heart and soul and their health into it and their relationships into it. People lose their businesses, they lose their marriages, they lose their houses, they lose everything, So I suppose that's kind of the injustice. But I don't know if it's appropriate that we're talking about it here because you're talking about a different style of business. So
yeah, I mean, yeah, the whole, yeah, sorry, go ahead.
Okay, so the question I have then is that this kind of investment, whether it's venture capital or angel investment, is appropriate for a particular kind of business and not appropriate at all for lots of other kinds of business. Is that true? And if it is, what kind of businesses does it work for? And what kind of businesses does it not work for?
I think a really great way to answer this is to I often ask founders to put themselves in the shoes of an investor. So say you've grown and exited a business and you've got, millions in the bank, and you're like, right, I've got enough money to do everything, and now I'm just going to put some money into some other businesses. Like, what are you looking for? What's important to you as an investor? Financially, there are some important things, and then there's like the personal things that you're passionate about, right? But the financial side of it is, if you're going to put money into something, you want to be able to see it come back, right?
Yep.
And in order for that to happen, there needs to be an exit event at some point in that company. And so a business needs to be able to work towards some sort of an exit. And the exit can be selling the company, could be going public, which is obviously quite rare, or it could be, I don't know, merging with another company, or maybe buying out your investors, which doesn't happen as often. So I think some people who maybe just started thinking about investment forget that actually they need to return the money, and how are they going to do that? A lot of the time that happens by selling your business. So you have to decide, do I want to sell my business? Is that something I'm willing to do? So if you just think about that bit for a bit, and you think about, okay, when I sell it, how much of a return can I give that investor? So say somebody gives you 100 grand and you say, okay, I can sell this business in 5-10 years. How much of a return is that 100K going to get for them? And it has to be, it has to sound good for you. So if you were investing 100K, you'd want to see, I don't know, 500K back, or 1 million, or the opportunity for that to happen. Because a lot of time investors are, realize that the money they're putting into all these businesses, a lot of them won't work out, or they won't get the money back. But they all need to have the possibility. Sorry.
I'm just getting popcorn delivered now.
Love that. I've got my popcorn over here. They'd want to be able to see that money return. So the main things you're thinking about, like, can my business have an exit point, and how much growth can that investment realistically gain? And then just think about it as an investor yourself. Would that be good enough for you? So if you say, I can return this money, I can sell this business in 10 years for a 5x return, right? 5 times the money they invested. Is that something realistic? And does that sound good for you as from the investor's perspective? And then the other stuff the investor's looking at is, is there actual big opportunity in the market for this company? And assessing it based on their own personal preferences. So I think if we were just to focus on that one area, it's just about investment, exit opportunity really, and scalability of business. And not all businesses can do that. Some businesses aren't going to be sold. If you're growing I don't know, say you've set up a family cafe, and you never want to sell it because this is your baby, this is going to go through your generations and you want to keep it, then how are you going to return that investment back? So it's just something to think about.
Okay, so there are businesses that are kind of investable and businesses that aren't. So my business, for example, I did get distracted by the idea that an angel might be arriving with some investment. But really, my business was a marketing consultancy, and it was really, I was selling me and my guys and what we could do. So that isn't really of any value to anyone else, because me and my relationship with my customers isn't something you can sell. You could sell them the business, but the customers could all just decide that they don't want to go with them anyway. So those, as I understand it, I don't know, I'm not an expert, but as I understand it, like service-based, relationship-based businesses are much less investable than maybe product-based businesses. And specifically, I imagine tech-based businesses.
Yes, in terms of how scalable it can be, because you're dealing with people. Scaling it is your costs go up as your revenue goes up, right? So
yes,
it's less scalable and less of a return. However, you could technically build a really successful agency and be acquired by another agency who brings you in, right? So
yes.
It doesn't mean it's not investable, and there have been agencies and service businesses that have got investment, absolutely. But yeah, they're just less scalable, and the returns maybe are less. But it's absolutely something to consider. And if you think about it, they are less risky. Like if you're investing in some new technology that you have no idea is going to work, it could return 50x for you as an investor, but it also has a very high percentage chance of failing. And then you've got an agency that could give you a 3x return in 10 years, and it's going to be really slow, but it's a pretty solid business model. Like, it's not really, there's not as much risk, but of course the usual business risk. And so what some investors like to do, especially, if we're looking at angel investors, they like to diversify their portfolio with those two different companies. So you've got some of the really risky stuff, and then you've got the more traditional businesses. So it does all fit in. It's just about how you, I guess, what you want to do as a founder. Does it align with raising that investment and creating that exit? Do you want to build a big business that's going to return a big, be able to create an exit point or not? So a lot of it's quite personal, I'd say.
Yeah, if it is an individual, it sounds much more personal, which is nice, much more angel-like. So what's the question that I want to ask? The question that I want to ask is, when did we start talking about 2x, 5x, 10x? Because we didn't used to talk about that. Do you know what I mean? It seems like in the last maybe 5-10 years, the level of return needs to be so much higher than maybe it would have done previously. I don't know if you know what it might have been previously, but this 5x, 10x, 20x, this is kind of new stuff, I think, in the last 5 years.
You mean for investors, or?
Well, even anything. Like, people talk about 10xing their cryptocurrency investments, and I don't know, it just seems to be like we've just gone to a completely different place where, if your money was in the bank 10 years ago and you were getting 5%, then you were doing great. Do you know what I mean? Whereas now 5% no one talks about 5%. No one talks about 0.05xing their investments,
Yeah, I think it's like just a whole different world. That's the thing, because if you're putting your money in savings, or if you're investing in something less risky, then of course it's going to be 5 times. I think that's still the norm. But
Yes.
with startups, and again, like, say we're talking about the typical investment is going to be in a tech startup. It's pretty new, very risky. That they often will need to have a high return for the risk that you're putting in place. So it's always that risk reward thing. It's so yeah, I think it's always been like that. Just different kind of environments and different contexts, right?
Depends how much money you've got to spend, I suppose, and where you're investing it, and all of those things. Okay, so the interesting thing is, then, you said that you need that return because it's risky, because it's this, but they don't always get it, do they? Like you're saying, if it's high risk, then these things will fail.
Yeah, so it's the possibility of a return. So let me give you a really simple example, right? So you've got £100,000 and you're going to invest in 10 companies. You're going to put 10K in each of them. They're all really risky. They could all fail. But what you want to do is you want all of them to have the possibility to return at least 10x, so at least your full portfolio. Because the typical kind of portfolio theory goes, you invest in 10, a few will fail, the middle ones will kind of like do okay, but not really return anything. And then one will do really well. So all 10 of them need to have the capability to return a high amount, but that one of them, hopefully will. So, but if they don't have the capability, then you're creating a lot more risk for yourself. So that's kind of where that, I guess theory comes from.
Okay. You see, I've got a theory. Are you ready for a theory?
Go for it.
Here's my theory. Is I think that businesses are operating under pressure already. The only person I know I've ever met who took on a substantial amount of investment on the global kind of brand level, I don't know Mark Zuckerberg, and I don't know that guy at Twitter either. So it's not those guys, but it's like a global brand, and he took on the investment and he regretted it enormously. He said basically the business stopped being his the second the money hit his account, because basically at that point, then he just had a job. And I don't know if he's still involved with the business. I think he might be. But so I don't know what the exit was I don't know what the deal looked like. But he said literally that. Like, literally, he stopped running a business. He stopped being a business owner and went back to being an employee the second the money hit his account. And he didn't enjoy that.
Yeah, that's very common. And I think that, again, comes down to people raising money because they feel that they should, but not thinking about, like, what does it actually mean for you? And do you actually need to raise money? do you personally want to run a business that has raised investment? I think those are questions maybe people don't ask themselves before they raise, because it's not right for everyone. It's not right for every business. And like I said, your business will change a lot once you raise, VC money. So you've got to decide, is that what you want or not?
Yes. Okay. And there is no angel investor, there is no VC who are just looking for a share of the profits on an ongoing basis. It literally has to be that we need to draw a line in the sand and it gets sold and everything gets divvied up and that's what happens. Is that the only way it works?
No, it's not. I guess, yeah, you could totally invest for the whole dividend thing. I think just perhaps most of the companies that I deal with are, we're looking at startups that don't have the capability to do that at any point soon, of giving out dividends. Otherwise, they probably wouldn't need to raise the money as such. So, yeah, maybe in a different world, different kind of investors. Yeah, I'm sure people are looking to get a consistent dividend. But then it's figuring a lot of the time, I guess, if you're raising money and planning to give out dividends, then probably you're raising it to grow faster rather than get it off the ground, I'm assuming. Because if you're capable of paying out dividends, you would be like, okay, right, we know how this business works. We know how to grow it. Yeah. So yeah, I'd say absolutely. That's
Yeah.
anything kind of goes. Like I said, it's like, if you think about it, if you really it can feel like an overwhelming, complicated world, venture capital. But if you just look at the simplicity of it, it's one person who has a lot of money invests in a company, and then you can figure out what that looks like. And I think that's always a good place to start.
Yes. Okay, 100%. So my theory is that what I think is, at the end of the day, this is just a pitch. Like you spoke about earlier about getting businesses investor ready. That's just like dressing a house for sale. Is it just like dressing a house for sale where you put together a great marketing story and you make the projections and they hit people's hit people's buttons, whatever, and then you tell them there's going to be a 10x return because this is hugely risky. But nothing is guaranteed, is I think what I'm saying, and it is just a pitch. And the company is just pitching the angel, and the angel is just pitching the company, and lots of these fail. That's what I'm interested to ask you about, is like what is the success rate? That's what I'm interested to know.
Success rate of companies?
Of investment. So how often does it get to the event where they sell, everyone gets what they're expecting, and then they go and enjoy the rest of their lives?
Oh God, it's probably very small. So like I said, like if you're going by and I don't know the exact statistic of this, but if you invest in 10 companies, like one of them will do well. That's the generalized assumption. So,
okay.
Yeah.
So they're hedging their bets. So they're saying, okay, some of these have to be 20x. Some of them will be 5x or 2x.
Yeah, but what you want to do is you want to bet all of them have to have the capability to be 10x, because you don't know which one is going to succeed. So does that make sense?
It does make sense, except how do we know that they have the capability? That's what I'm kind of saying. Because what I'm saying is it's just a pitch. And of course, somebody who's looking to take on investment is going to put together the most beautiful pitch where all the numbers make sense and everything makes sense. And then on this date, we're going to sell and then you're going to get 10 times your investment. It just seems to me, I don't know if this kind of challenges it just seems to me that this is much, much more speculative. Of course, it's speculative.
Oh, yeah, totally.
Yeah, I don't know even what I'm trying to say.
Just to clarify, it's not always packaged like that. It's not like you will go to an investor and say, okay, this is exactly what's going to happen. It's, a lot of it's just for the investor to judge, like they will judge it around, okay, do I think this could do it? And it's up to the founder to present the right data and information for the investor to make that decision. It's not like we're all agreeing on that one thing. It's like, a good pitch and a good kind of proposition to an investor is somebody who comes in with an idea that a great idea, and they've got the financial model backing to showcase how it will grow and how much it can grow. how big the market is, like all that kind of stuff, what they've proved already, what are they backing those projections with, and all that kind of stuff. And everybody at the table knows that none of that's actually going to happen and none of that's accurate, but it's for the investor to then discount how they think it's going to work. But you have to come up with something in it, and it's less around projections being accurate. It's more about like from an investor's perspective, you're assessing how does the founder think about this business, and what does the model look like. So we look at financial modeling of, okay, if in order for them to make £1 million, they need to have this many customers. And in order to have this many customers, how much money do they have to put into marketing? Like, so you're looking at what they've planned, and then you're looking at it and saying, do I think that they can do this? Does it sound realistic? And then, of course, like, they might achieve 70% of that, or whatever, depends how realistic they've been or how conservative they've been. But yeah, that's how you assess it. You just look at all the data and then you just decide.
Yes. Okay, because I've already had a conversation like this on this podcast, and that's probably what's clouding what I'm trying to think. And I think I said it much more succinctly in that conversation than I'm saying it in this conversation. I don't suppose you're a football fan.
No, sorry.
Or any kind of sports fan. And they'll say, oh, he's no good under pressure, or he's putting him under pressure. But it just seems to me that nobody's good under pressure. That's the point of under pressure. Do you know what I mean? And I just wonder if these returns are inflated, unrealistic inflated, to mitigate the risk. I need a bigger return. Does that create a pressure situation where it makes it harder for people to realize? I don't know. I don't even know if it's valid. I don't know. Yeah. So, I'll ask you another question. These people, these angel investors, these are weirdly mysterious people. Where on earth do you find these people? These are like mythical people.
I think, and I think, again, like what I mentioned earlier about like just stepping back and looking at how it all works, is people do, and I did as well before I was in the space, you look at this whole venture capital investor space as like this other world that you don't quite know how to access.
Yes.
But the best thing to do is just remember that all of those people, all those investors are just people. And you just think about, okay, if I was that person, like, where would I hang out? What would I do? And that I always say, it's like, just as you would with sale, like, this is your biggest, I always tell founders to approach this as like your biggest sale. Like, this is your most important sale that you're going to make if you want to raise investment. And so what would you do if you were selling to somebody? You'd create a customer persona, you'd figure out how to reach out to them, and then you would reach out to them. And because it is quite difficult, or people don't really consider it in that way, that's why communities like ours work quite well. So rather than you having to go and find these 100 different investors to pitch to, you can go to groups like Southeast Angels, or like, there's loads of them in the UK that you can just reach out to, and they already have a community that they've pulled together, and you can pitch to loads of them rather than having to sell to loads and loads of different people. So yeah, I think it's taking a step back and realizing they're not mythical creatures, but just people like all of us.
Yeah. And I suppose the world has changed a little bit. When it was 2014 when I stopped running my business like an actual marketing agency, and it was 2005 when I started. So I think it's interesting. Okay, so here's the other thing then. It sounds less like it, but it seems to me that there is a whole style of business now who start from the position, we need to raise money, we need to get as many sales and as high a valuation as we can as quickly as possible and get out. And that, I think, is different from what was going on 25 years ago. Like, maybe 25 years ago, people were much more kind of involved in their industry and thought they had a good idea of how to do something better and how they could deliver value. Whereas that's exactly the question I want to ask. Like, whereas previously the motivation might have been, how can I add value for my customers? It feels like now it's like, how can I extract value, give value to my investors and extract value for myself, and then kind of get out. Does that make sense? So it's almost like the core, like the product is just a mechanism, really, rather than what it might have been previously, which might have been the whole gig.
I see what you're saying, and I think I mean I couldn't compare with the 25-year thing, but I think what you're describing there is specifically when people raise like big VC money and then they have to exit, and that's all they're thinking about. So I see what you mean. Like some people get stuck in that. Okay, we're just doing this to exit, and what do we need to do to exit? So there's definitely that does happen, right? If you're raising big money and it's like we have to exit in 3 years, and it's less about what is this business. Yeah, that must happen loads, but I think it's certainly not everybody who raises money. I think it's very specific situations.
Yes.
And that again probably comes down to raising money for the wrong reasons, and sometimes it does seem like it's a badge of honor in some places, right? Like, oh, to raise money is like something you have to do, but
yes,
yeah, I don't think that should be the case.
I thought of a better way of putting it then. So the idea of developing a product, and what would you call this? You might call it kind of organic growth, or not organic. What would like growing through your sales seems to be very old-fashioned now. It's like, because everyone else is getting accelerated and you're just selling stuff and making people happy and generating enough money to reinvest. What would you call that kind of growth? It hasn't got really a buzzword.
Which one? Which one?
For where you just grow organically
organic growth
through sales, organic growth.
Organic growth, yeah. I mean, I don't know. I mean, when you say other people are doing that, and like what groups are you referring to? Because I think I'll do both. Yeah.
Okay, so I'm just putting some training together around product development and innovation and all these things. And what you see if you look at like the most successful, best innovations of the last 20 years is that nothing has happened organically. Like Facebook happened because Mark Zuckerberg was able to attract billions in investment, and famously it was non-profitable for years, and the same with Twitter. I don't know really about Google necessarily, but it seems like the really big stuff that happens through investment. And maybe that's just because, it has to have investment to get to be that big.
Yeah, I think you're spot on, right? So like if Mark started Facebook and he decided he didn't want to get investment and he wanted to just, he could have done something on a small scale, but it wouldn't be Facebook today, because he would need to, in order for it to grow organically to get to the point it is now, probably would have taken decades. And by then it would have been, not relevant anymore. So what venture capital essentially is allowing people to do is to be able to do things at scale, to do things internationally, to do things faster. Like a really good example is the Nike story. I don't know if you've read The Shoe Dog by the founder of Nike, but he talks about, I think it was in the 60s when he first started it. And at that point, there was no such thing as venture capital, really. So he was trying to get loans from a bank. Like that's obviously what you do. Your go-to thing would be to get a loan from a bank. And what he was trying to do was he had to, it was a product business. He had to buy stock to sell it. So he needed money and he didn't have it from anywhere else. So he would go to the bank and they would say, this is very risky stuff. It's not what a bank would do. But he would convince them, he'd get some money, and then he'd spend it, sell it, and he'd need to go back and get more money, and it would be a consistent thing. And it was just so much work and so much stress. And then eventually he met a few venture capitalists as that kind of stuff started to appear. And that helped him to actually scale it. And it's like, okay, if venture capital didn't exist, or he didn't get those bank loans, like, would Nike exist today? Probably not. But not everybody wants to do that. Not everybody wants to run a big business like that.
No.
That's
okay. Fine. But I think 100% you need money to run a business. It kind of doesn't matter what kind of business it is you need money, and you probably need more money than you need to. And then you imagine you do. And okay, so this is good, but it's a different thing. So I suppose it goes back to bank loans and things like that. Okay, do you want the good news? I think you are eminently qualified to talk to us about angel investments. I've grilled you quite hard. I think you're eminently qualified. So that takes us then to question number 2, which is, who do you work with and how do you add value to their lives? And I'm imagining you're working with both of these sets of people and adding value to both sets of people's lives. Is that how it works? Are you in the middle, or are you working more for one or the other?
Hopefully we are. So I guess our main priority is to, initially when I started out, I thought our main priority was to get founders money, essentially get them invested. But what I soon realized was, in order for that to work, we needed to have a really good community for the investors. So it quite quickly shifted into creating the most valuable community for investors locally, so that they would have other people to invest with, that they could do the due diligence as well as they needed with each other and stuff like that. So our, the main people we work with is investors, and we add value to them by creating a community for them that helps them to make more informed investments, and of course gives them opportunity of like finding some of the best ones, because we vet the opportunities for them, so they get presented the best opportunities based on what they're looking for each month. And then on the other side, of course, it's the people raising money. So they reach out to us, we vet them, we don't really provide a service in supporting the companies, but we have some partnerships where we do that. So we'll have little clinics and stuff like that where we can advise people on how to get ready for that investment, or to be to get to that investability point, or do they need to raise money and is this the right time, stuff like that. And of course, ideally get them funded if it fits in and it's right. It's the right timing.
Okay, cool. So interesting then. You said that Brighton didn't have a community like this, but is the most competitive. How does that work?
I don't know if I said that. I think I said London is one of the most competitive places to raise money. So basically, because Brighton didn't have a place for founders to go to raise money, they would go to London, which would be the most competitive place. So it just didn't make sense.
Okay. But Brighton is quite special, isn't it? It's very creative, Brighton. There's kind of a tech edge to it around the universities and things. So how does Brighton fare with the rest of the country in terms of what's going on, in terms of what's investable businesses?
So interestingly, Brighton has, only in the last decade or so, it's been more recognized for the business side, because it's always been this kind of like seaside tourist town, like a bit hippie dippy sort of place. And when I used to speak to investors from outside of Brighton and I'd invite them to come down, they'd be like, what's in Brighton? Like, what businesses are there? Is it worth coming down? So, but in the last decade or so, there's been some really big tech exits and stuff like that. So, and if you just look at the ecosystem and look at the co-working spaces and the accelerators that have popped up in the last decade, that shows you that things are really starting to pick up. In terms of, if you look at the kind of the business statistics, I guess, you've got so many early stage startups, and you don't have these like scale up companies as the government would define them. So it's a small city, and we don't have a lot of space. So you've got like 2 big companies, and then you've got loads of startups. And then a lot of the time they do tend to leave Brighton to grow, just whether there's more space, more funding, more people to hire, stuff like that. So the way that I like to describe Brighton is that it's a incubator of ideas. So a lot of ideas emerge here. It's very, like you said, it's very creative. There's a lot of video game companies. There's a lot of kind of digital marketing companies that have stemmed here. A lot of food brands and restaurant brands and stuff like that. So it's kind of like this incubator of really cool ideas. And then a lot of the time they do tend to leave to grow.
Yeah, it's interesting. I'm trying to remember the statistic. There's a thing about being on the coast as well, isn't there? Where you're only marketing to 50% of a market. Have you heard that idea? It's like 50% of your market is the fishes. So it's not necessarily, it's beautiful, charming, all of that stuff, but it's not necessarily the best place to be in business. But lots of creative, lots of marketing, like lots of creative agents type stuff, lots of like sole trader agencies. It's a really cool place, and the sun shines sometimes as well, so that's nice. So so you're not just a shop front then, so you're not just like if somebody in Brighton thinks I'm really interested in having some investment, they have somewhere to go. You're actively involved with both sets of people, the investors and hopefully the investment prospective businesses. So here's the question then. Every business owner, especially by the time they've managed to find you, is 100% convinced that they are 100% worthy of some investment. So how do you manage that? Because clearly they can't all be.
Are you asking, are they 100% convinced at that point? Is that what you're asking? Or you're saying they are?
No, so I'm kind of assuming that because that's my experience. Like 100% of business owners thinks their business is the best business in the world and is worthy of everything that's coming.
Yeah, I guess you could say that. Yeah.
Yeah. So how do you manage that? That's what I'm interested to know.
Right. Okay. Yeah, I mean, obviously we have to say no to a lot of people, and we're quite open and transparent about why we say no. I mean, interesting, like most of the time, the majority of the time, us giving people feedback about their business, people are very open to receiving it. And I think if you're going out for investment, you have to understand that you will get a lot of people say no. And we're, as we talked about earlier, we're all making assumptions here. It's all speculative. So you don't really, nobody knows the right answer. But, we will give people feedback to say, we don't think there's a big enough market for this. Or I'd never ever say an idea is not a good idea, because who am I to judge that an idea is not good? Like, everybody's ideas are totally valid. And, if they can prove that it works.
They're not though, are they? Some of them are really not valid. You must have seen Dragon's Den.
Well, here's the thing. I'm sure you've seen some like bizarre ideas that were so ridiculous, but they've made loads of money, right? So I think this is the thing, like ideas are always, crazy or absurd. And it's like, but as investors, you're never really judging the idea. You're not saying this is a rubbish idea. I mean, obviously you can if you want, but that's not really good feedback. I think if somebody comes to me and the idea is absurd, I'd say, well, okay, how have you validated that this could work? And if they can show me that they validated that it can work and it can make money, then, fair play. But a lot of the time, people come up with ideas and they haven't proven outside of their mind that this could be something that could work, and they know how they can make money out of it. So yeah, the feedback will tend to be, around the business model or the scalability of it, or that it's not clear sometimes. I think that's one of the most common things. People aren't very clear with pitching it. And again, it's like a marketing sales thing, right? Yeah. Number one, always clarity. So we have to do a lot of saying no, but and sometimes we just say no because we don't have interest in our groups, because every investor has a different interest and different things that they're passionate about. So there has to be also a match with the investor's interests.
Okay, cool. So that's interesting, because you described it as vetting. So you vet the businesses that are looking for investment, but you support the investors with a community.
Yeah.
Okay, cool. And once you've set these people up and the investment is made, is your job done then? Do you go back to getting on with your life, or do you? Because I think there's a feeling that other than just money, the thing is, Dragon's Den has completely corrupted the way everyone thinks about business, I think. So it's like there'll be the money, and there'll be the thing that I bring because I'm brilliant at this thing. So no, maybe it works the other way. So when you talk about getting them investment ready, what does that mean?
So the getting investment ready is just somebody having everything that they need. Well, first deciding, is investment right for them? Is it the right timing? And then preparing all the documents that you need to pitch for investment, and making sure that you have thought about all the stuff that an investor would ask. And then the bit I think you're referring to in terms of what happens after, like post-investment. So just to clarify, like what we do, because we're not a venture capital fund, we're, a community. So we connect people and we create the communities for these things to happen. We don't actually get involved in the actual investment side of things. We're basically a community that connects people together. And then after the investment, a lot of angel investors will like to stay involved in the company. And so there will be kind of like what you see on Dragon's Den around like, okay, well, I would like to support you with this. And, sometimes the founders get to choose what investors they work with if they have enough interest as well. So yeah, angels do like to stay involved if it's relevant for the business. Of course, they don't have to. And then what we do as a company is, of course, we stay in touch with all the companies that our investors invest in, and we support them by linking them up with accelerators or linking them up with, maybe useful contacts or other founders or, future round investors like VCs that can help them continue to grow. So yeah, we do a lot of that kind of after investment support as well.
Okay, because it is like that, isn't it? There's a hierarchy. So angel investors might invest up to whatever it is, 100,000, and then the next phase is 400,000, and there's a different level. Have I got that right? Is that how it works?
Unfortunately, it's not as like simple as that, I guess. So an angel investor, like say an individual person, could invest as much as they wanted. Like there's no, the typical investment size from an angel investor would be like, I don't know, anywhere from like 10K to 500K. Like that's maybe your typical thing, but that you've got these like ultra high net worth angels who invest $1 million or $2 million in a company.
Yes.
So that could kind of go anywhere. And then it's more like the stage of business, I guess. So angels will tend to be some of the first people to invest in a company before they go for investment anywhere else. And then you might raise some crowdfunding. You might go to an early stage VC. So VCs now cover like the whole journey of a company. So again, like it's all kind of a mishmash of things. And some people could go to a VC first if they go to an early stage one that has like a pre-seed round, a pre-seed fund that they are investing. So yeah, VCs cover the whole kind of thing, but you tend to go to an angel first because you've got like one or two people. You need less money, so you don't need to go raise a lot of money from a fund.
Yes.
Yeah.
Okay. And so what I'm interested, I think what I really want to know is like, if somebody comes to you, is getting them investor ready about dressing them for sale, or actually, I don't know, maybe looking at their governance and saying, okay, if this is going to happen, then you need to sort out maybe your HR policies, or you need to maybe structure your delivery, or you need to, do you know what I mean? You're not.
Yeah. So investment ready is just like preparing yourself for receiving money or
Right.
preparing so being like at the right point, because there's so many things you have to think about. You have to think about, do you
That's what
have
I'm interested in,
everything
is what you have to think
sorted?
about.
Yeah. So just to clarify as well, like we don't offer that as a service. We just kind of do it in partnership with some people. And when people apply, we don't do any of that, but we might just advise, okay, you need to go away and do that. So yeah, getting investment ready is kind of like, first and foremost, getting yourself personally ready. Like, okay, do I know why I'm doing this? Am I ready for this? It's a full-time job, raising money and all that kind of stuff. And then it's a case of looking at your company in the kind of legal aspects. Like, do I have all the right documents in place? Have I got all the shareholder agreements? Or did me and a few founders just kind of like, make things up as we go along? Like it all needs to be structured properly. Then there's something really important in the UK, which is if you're eligible to apply for tax relief for your investment. So for example, we only really work for companies that have tax relief on their investment. So that's just a case of registering with HMRC your business and getting a certificate that says that you have EIS and Enterprise Investment Scheme relief. And so there's that kind of like legal paperwork, stuff like that. And then it's, okay, do I have everything to present to the investor? So do I have a pitch deck, which is what I'm going to pitch with, or what I'm going to send across to them, which covers the key things of my business without and is clear without going into too much detail, but able to sell the vision basically. And then having your financial models, like one of the most important things that some people tend to forget to do before they reach out to investors. So, and again, that's not for projections, but rather to show how your business model works over time and how it can scale. What else would you need in place? Just like, any data that would prove or validate what you're doing. So whether it's, customer acquisition or the growth of your customers over time, or what stuff have you validated to date if you're quite early on. And then, of course, a plan of how you're going to spend the money, because the investors want to know why you're raising it and what you're going to do with it. Yeah, I think those are most of the things.
Okay. Because now I'm thinking about marketing. It's because I don't know what the percentage of marketing, but if you're going to accelerate the growth, that's surely going to be sales and marketing led. Like that's how you, like by selling more product. So some of this investment surely must be going towards marketing. And then there's like a 50-50. You could get the marketing completely right or you could get it completely wrong. I don't know if you agree with that.
Yeah, I see what you mean. Like, I think again, it depends on what stage of business you're investing in. So you might be investing like super early, and someone's like invented a product, and they're actually raising the money to just develop product for the next 2 years.
Yeah.
Or a lot of the time, you're investing when a company has validated something, and they're like, okay, our website is ready, and we've got a few customers in the waiting list, and now it's a case of us like pushing marketing, and so we need the money to grow. And it might be a case of like, there'll probably be questions from the investors around, okay, what are your key strategies? Who are your key hires going to be? How will you know that it's working? What metrics are you going to use and stuff like that? So yeah, depending on the situation, the investors will question around that specific area. And you're right. If it's at a point where a company's ready to grow and they need the money for that, then marketing will be a big part of that. And as a founder, your job is to constantly test things. That's why I think so. You're not just running a business, but you're constantly testing your assumptions. So you might go to investors and say, we're going to spend this much money on Google AdWords, and we think it's going to present this much of a result. And as a founder, every week you're testing that, right? So you're testing like, is this working? You split test things, and then you probably pivot 100 times before you get to the right kind of solution.
Yes. Okay, cool, 100%. So what is your business model? Can I ask that? Is like, who are you charging? That's what I'm interested to know.
So we've gone for the traditional angel group model, which most UK angel groups run on, which is we have a success fee with the founders. So when they reach out to us for funding, we don't charge them anything unless they receive funding from us, and then we charge them a 5% success fee on the amount raised. And then because we have more of a community around our investors rather than a list of investors we send pitch decks to, for us, it's kind of like supper club meets investor group. So we charge a membership fee to our investors. And so those are the two sides to our business model.
Fantastic. Okay, cool. So is it almost, because I suppose, you are right in the middle. So you are essentially, you're not presenting any investment opportunities that you're not convinced of. So is that fair to say? Like you won't even present it if you're not convinced that this is right. Like you've actually worked with them, you've vetted them, so you've decided, and then they use their judgment. Okay, that's easy. That's really easy. Okay,
yeah,
good.
And our investors are, because it's a community, like they play a part in vetting the companies, if that makes sense. So vetting I don't know if that's the best word to use, but it's kind of just sense checking with the group, and the group very much decides, okay, these are the best companies and these are the ones we want to hear from. So it's less of us as a company making a decision, but rather just creating the opportunity for, curating, maybe is a good way to explain it. We curate a group of companies, and then the investors decide who they want to hear more from and who they want to invest in. Yeah.
Okay, super cool. Excellent. Okay, good. Now I really understand. Okay, so the next question then is, but this is also twofold. So recommendations then for people who want to be more successful at raising angel investment, and then maybe angel investors who want to be more successful with their investments. What are your recommendations?
Cool. So I think with founders raising funding, I'm going to go with like the most common thing I see go wrong, and recommend on that, which is clarity and like simplicity of pitch. And this is very much like a marketing recommendation as well, right? So no matter how complicated your business or your product is, you should be able to explain it to a child. Like that's how you got to look at it, right? So it has to be, your message has to be simple and clear. And sometimes people want to put all the information in, for example, into their pitch deck, but it takes away from your main and most important points. It's the same with marketing something. And all you need to do with your pitch deck is to, at the end of it, people need to understand exactly what it is, and they need to be excited and interested to ask more questions. And that's it. So you don't have to put everything in there. Just create a really simple pitch that you can sell the vision with. And then you can always expand on that later. So I think the number one thing is just remember to be clear. And I think the most important skill in general in marketing or selling, and that comes in handy here, is copywriting. I think it's such an undervalued skill. Copywriting is so important. Can you explain things and sell things in a nice communication style? So it would surround that kind of area for founders, I would say.
That's a great recommendation, because this is what I tell people all of the time. Like when I'm teaching them marketing, is like the job of, just get the thing just needs to do its job. So if you break it down into something like PPC advertising, for example, the ad just has to get the click, and then the page just, do you know what I mean? So it's like, that's a great recommendation, like a pitch that inspires people to be interested and have questions. That's a great recommendation. I might steal that.
Cool. And then with the investor side, I guess it depends. It's kind of a tricky one, because it depends what their situation is. The thing with investors, with angel investors, is they don't need to invest. Like a lot of the time they're doing it because they enjoy it, right? They're ex-entrepreneurs and they kind of want to stay in the game. And so whether they like recommending how they should invest to get more returns isn't always the most appropriate, because sometimes they're doing it because they enjoy it and they want to back certain companies. But I think sometimes investors tend to, who are just starting out, they're kind of like, okay, how do I know when it's the right company, or like, how do I start getting involved? And I always say, actually, the best thing to do is just to mentor other companies first. So without going in and saying, oh, I'm looking to invest in a company, who should I invest in? Instead, look at it as, I want to mentor a company or advise a company. Who do I want to advise? And then it's quite a nice organic way to go into a company and invest in them, because say you advise them for 6 months and you're like, I've seen the inside of this business. They're amazing. The founder knows how to sell. Like, this is going to go places. And then you offer them investment, if they need it. So it's quite a nice organic way in, rather than just, kind of looking at pitch decks. And a lot of the time, the new investors that join our community, they're in that position, and we recommend them companies to just, speak to and mentor sometimes to get some access into that world, sort of thing.
That's genius. That answers the question that I couldn't even find what the question was. My issue with this is that it's a load of, okay, so like my most extreme position would be that this is a lot of egotistical, idealistic, expectant business founders expecting that they should be getting investment, dealing with a lot of rich people who've got more money than sense necessarily, and it all becomes about that pitch. It all becomes very subjective, I think. Does that make sense? I'll tell you what I'm thinking of. You mentioned co-working spaces. What's that?
I don't know if I agree with it, but I see why you would think that.
Yeah. No, well, that's the most extreme. That's not exactly what I think.
Yeah,
but
and that happens a lot. There is a lot of
yes, and
who do have that stance,
yeah, and they don't always get it right. And some people lose a lot of money. Some people make a lot of money. That's fine. I'll tell you what I'm thinking of. I'm thinking about the WeWork example. Did you see what happened with that? Where the guy was just, I think of him like the pig out of Pulp Fiction, when he says, I have to be a really charming pig. This guy was like the most charming pig on the planet. And he just took billions in investment because everyone wanted to invest in him. It was essentially a cult. So I don't know if that's like I don't know. I think that's the most extreme thing. But your recommendations, both of them, are genius. The first, yeah, I mean, both. The second one, because you're investing in personalities, aren't you? That's what you're doing. And so
Absolutely.
actually being involved and going and seeing them and understanding the business and seeing what happens day in, day out, or turning up unannounced occasionally, I think really is the answer. Those are the best recommendations anyone's ever given in these conversations.
Oh, amazing.
You're doing brilliantly. Okay, cool. So that brings us then to, is there anything that you should have said is there anything you said that you shouldn't have said? That's always the most interesting question.
I don't think so.
Okay, that's
I'm
not
an
very
open.
contentious. So is there anything you haven't said that you think people should know about this?
No, I think we've covered quite a bit. No,
Okay, cool.
I think I'm happy.
All right, so that brings us then to question number 4, which is what should people read? Yeah.
About investment or
About investment or about being in business or about marketing or about sales or whatever it is. Is there something you've read?
I mean, I love reading. As you can see behind me, I've got a lot of books, and now it's quite a broad range of books to choose from if it's about anything. So it's a tricky one. I think if I recommend in a few different categories, perhaps.
Yes, you can do that.
So we just talked about if we're going first on the topic of like marketing, sales, and I mentioned around like being clear and the whole like copywriting thing.
Yeah.
I've read quite a few books around writing, and I think because again, like I really do think that whether you're a grad or you are a business owner or you work in marketing, whatever, I just think people should spend more time learning to write better because it will help you to speak and sell better. One of my favorite books about writing is Bird by Bird, and I can't for the life of me remember the name of the author, but Bird by Bird is a book about writing, and it's just a really nice, fun read, and it teaches you some writing skills. And
Bird
then
by Bird, is that BIRD by BYRD?
No, just regular bird.
Okay, because I wonder if it was Drayton Bird.
Oh,
I don't know. Okay, anyway, don't worry. I will Google it and I will find a. Yep.
And then around like just marketing and sales stuff, I think one of the most interesting books I've read on that is something called 24 Assets by Daniel Priestley, and it's a great book whether you are a freelancer or a business owner or like any even if you're just like in a high corporate position or whatever, and you're working on brand stuff. 24 Assets basically covers all the different assets that you should be building in your business. And it talks about personal brand, it talks about marketing, talks about sales, and it's really practical read, which I love.
Cool.
So I always like to recommend that book. And then general like business stuff. God, there's so many great books. I think if you are raising funding, then there's probably a lot more stuff like online to read about, but one of the best books I've read is, I think it's just called Venture Capital. Maybe I'll send you the link after this. It's an American book. And this is the thing, there's a lot of American books about venture capital, whether you're an investor or a founder, and finding a UK one that talks about like how it works in the UK is quite tricky. But yeah, there's one called Venture Capital that talks about how VCs look at investment. So it gives you the other perspective, which is quite handy.
Cool. Excellent.
Yeah, we'll leave it at that. I could go on forever.
We will. But there's something, because I was looking at your LinkedIn profile and I saw your activity and you posted about reading. So I didn't know that I have to be careful about this books thing because occasionally I speak to quite young people and they don't read books. So I have to say or content that they consume. But you posted about reading and it had 700 and odd likes. That's a lot, isn't it?
Yeah, I guess so. I think it's probably one of my most popular posts, and it has nothing to do with my business.
Okay, that's cool.
But no, I'm just a big reading fan, and I run a book club here in Brighton for like business owners. Yeah, I love a good read.
Okay, good. Excellent. All right. So that brings us then to the final question, which kind of depends. I feel like I've challenged you a little bit. I don't know why I was so challenging today, but I just was. Um, have you enjoyed the experience of being on my little talk marketing show?
Yeah, it's been a whirlwind. Yeah.
Okay, cool. So then you shouldn't have too much trouble throwing a couple of people under the bus. Who do you know who might enjoy to have a conversation like this with me?
Hmm. So I think in terms of like marketing, the first people I think of when I think of like marketing salesy stuff, um, there's Emily Lashmar, who she's the creative director at Platform 9, which is a co-working space here in Brighton.
Okay,
And she's very like she's very much on brand stuff, but I think that's such an important part of sales and marketing. So I feel like if you haven't had many brand people, that would be a good one. And I feel
that'd be
like you
really
need some
good.
more women on your podcast. So I'll give you a couple more women in there. Um, there is. I interviewed actually for a podcast once a woman called Georgina Richardson who did marketing at Trusted House Sitters. I don't know if you've heard of Trusted House Sitters. They're now like a huge global company. So they've gone from like startup in Brighton to huge company. So she's experienced that growth and marketing within it. She's now at another company that I can't remember. But she would be a really great marketing person to speak to.
Yeah. Do you know what? I was at sixth form college with the guy who did that. Um,
Oh, cool. One of the founders.
yes, yes. That's insane. Crazy. Okay, super cool. So the way this works best is if you can set up kind of like a LinkedIn intro like Ben did, and then I will pick it up from there. And then, yeah, that's the way it works best. If you could do that, I would be enormously grateful.
Cool.
This,
Absolutely.
yeah, this has been really, really interesting because I just think your recommendations are just exactly what the way people need to be thinking about this. Exactly the way that I'm not with my corrupt mind. Is exactly like I suppose it's just get involved is the
Hmm.
message really is just get more involved because I was expecting you to say like your recommendation for founders would be oh just come up with a really good pitch and your recommendation for investors would be I'll really test the pitch. Do you know what I mean? But actually get much more involved is a much better way of looking at it. Absolute genius. Thank you so much.
No problem. Thanks for having me.
Okay, you're very welcome. So what I will do is we'll say goodbye now for anyone who's watching, and then what I will do is I'll stop recording and we can say goodbye like normal human beings. Is that cool?
Yeah, sounds good.
Okay, so thank you so much for your time. I think it was really insightful. I hope I wasn't too challenging. I think I might have been. I
No,
think I'm
not at
just in a
all.
bit of a challenging mood. But I've
Not at all.
thoroughly enjoyed this conversation. Thank you so much.
Awesome. Thank you so much for having me.